And continuing with the U.S. economy, the Fed is now confronting a tough decision on interest rates. With the final meeting of the year slated for Wednesday, eyes are now on the central bank's decision as many expect to see a third interest rate cut. For more on this, we're joined today by Professor Song Soo-young, professor at the College of Business and Economics at Chung-Ang University. Professor Song, thanks for joining us this morning.
Yeah, thank you for inviting me, and good morning to you.
So, although the Fed is so divided, markets are expecting a rate cut, right? Why is the U.S. Central Bank likely to lower rates?
In the past several months, the U.S. Has been shut down because of the conflict in the National Assembly. However, recent release of the job openings and the labor turnover by the Labor Department has shown that clearly the U.S. job market is not collapsing, but clearly it is losing steam. So it means that they need to decrease the federal funds rate by as much as 25 basis points. So to that regards, the concern has been put on some labor side. And also in details, the quit rate and the vacancy rate has been steady and remained very low. And even though the job market is slightly recovering in October and November, but still it is job market is weak. Therefore, I guess most likely the Federal Reserve Board would like to decrease the interest rate this time by 25 basis points.
I see. And how might the Fed's decision impact the Korean economy and Korea's own decision on its interest rates?
Actually, our Korean economy has been dependent much on some international trade, particularly the export to the United States. That is evident, but recently the exchange rate, particularly the Korean exchange, Korean won against US dollar has been moved, I believe, is quite independent of the fundamental of the economic situation. Just a very transitory and a very temporary cash flow or capital flow out of the Korea and inside into the Korea. That matters a lot. That determines the fluctuation of the volatility of the exchange rate. Therefore, I believe that the decrease of the federal funds rate in the U.S. does not have much impact on Korean economy. But I would like to say the Korean economy should be more concerned about inside the domestic demand and domestic economy much more. So focus on some portfolio diversification of the international trade and reduce our economy's dependence on the reliance on some international trade. That is one way to overcome. And then Bank of Korea should decrease the interest rate by as much as 25 basis points, even though our economy has shown the CPI is very lower. Even the month-on-month consumer price index has been negatively decreased, showed negative numbers. So some price pressure may not be the major threat, but currently our economy is lackluster of the growth rate. Even though the growth rate of the GDP has shown 1.3%, that is mostly supported by some front loading of the export products to the United States and other countries before the brunt of the tariff uncertainty has been because of the tariff uncertainty. But right now the uncertainty has been removed. Therefore, our Bank of Korea and our government should focus more on the domestic economic issues.
Right, and staying on that domestic economic issue, the Bank of Korea said it'll purchase 1.5 trillion Korean won. That's around $1 billion worth of government bonds, and this is the first time in 3 years since the pandemic that they're doing this, right? The central bank said this is to better respond to rising interest rate volatility. What's behind this move, and what impact will this have on the market?
Yeah, they have issued a $500 million US dollar and a 10-year bond and the 30-year bonds of $500 million. So the yield has remained 3.957 percentage points. So that is, I believe it is modest. But thinking about current our economic situation, even though unemployment rate is 2.2%, employment rate has been stabilized around 63.4%. So that implies that our economy needs some, even though unemployment rate is low, but that is primarily because due to some old labor workers, temporary job, and some low wage income. So unemployment rate is not some credible indicator rightly describe the current Korean economic situation. So some weakness and the weakening of the purchasing power of the consumers in domestic economy, that is a matter of concern, should be a matter of concern, and it should be put forth to shape up our government policy. So clearly the issuance of the Korean government bond to raise the US dollars is to be used some kind of a preparation for the further depreciation or some kind of a fluctuation, volatility of the exchange rate should be attenuated, mitigated because of these activities. And let me point out the possibility of the involvement of the National Pension Service to have they have a hedging, try to have a hedging and against Korean won against the dollar. That could help alleviate the burden of the exchange rate. Sudden change could be mitigated.
I see. I guess we'll have to hope that resolves the current economic issues that we have here in South Korea. All right, Professor Song, I'm afraid that's all the time we have for today. Thank you so much for your insight. We appreciate it.
Thank you very much.